In our trader rundown, we have a lot to get to with Dan Deming of KKM Financial. Hello, how are you?
Fine, Angie. Thank you. Thanks for having me.
Let's just start with the fact that the GOP convention is getting underway. So what will this mean to the market? And is the market starting to price in the presidential election yet, do you think?
I think, yes, I do. I think that the big surprise would be that if Trump is able to mount a serious challenge to Hillary at this point. I believe that. I think the market is kind of built that in, that it's going to be kind of a similar situation it's been dealing with for the last 8 years. I think the market has, for the most part, accounted for the fact that Hillary will probably be the presumed winner of this election.
That's what the stock market is pricing in at this point.
I believe that. That's my personal opinion. Yep.
We'll see if that turns out to be true. The market can sometimes be ahead of the curve on these things. Let's talk about this week as well, because we do have a lot of big earnings coming in. The big three sectors, we've got what? Banking, tech,
we have
consumers.
Banking last week and this week.
Yes.
But we also have consumer staples really highlighted this week. You also have industrials and the technology sector. Those are the three big sectors that are reporting this week in the SPX, the S&P 500 index. So a lot of market participants will be watching that. This week we also have post-VIX expirations. So as far as options traders, I think, VIX options traders, volatility traders, it's a little unique situation where you have VIX expiration after regular expiration, which was last Friday.
And let's just talk about the VIX at this juncture, because the VIX continues to grind lower.
It is. Yep.
Does that mean that we're comfortable with going higher with the stock market?
Well, I think it means that the markets right now, traders are really, volatility is subdued, and with this big push in the markets, I don't know if it's really signaling anything other than the fact that it's certainly, the odds are now that there's going to be some type of mean reversion, or meaning that the VIX will probably pop up, given the fact that it has gotten to levels that are very, very subdued. When we saw last week, I think 1214 was the low. I think that's the lowest for the year, and really you have to go back to August of 2015 to see a low of that level. So yeah, I think the odds are such that volatility will see a little bit of a pickup here in the next couple of weeks, not maybe significantly, but if any give up in the market, then vol's been so compressed that it will probably react a little bit.
I know you tend to watch the Russell.
I do.
And the technicians are all over this inverted head and shoulders pattern, which could indicate a bull run for the overall market. Do you agree with that?
Well, I think that it's a strength. I mean, when I evaluate the markets, I have the plus column and the minus column, and you kind of just see where everything falls out and then try to make, weight things accordingly. So yes, I think that that's definitely a plus. You can see that same pattern actually taking place in the emerging markets as well. So again, so you're seeing this reverse head and shoulders pattern. It's being talked about by technicians. It typically is a signal of strength that can propel this market higher because of the foundation that it builds.
So many positive signs in the stock market. This is going to be an interesting week, to say the least.
It is. Yeah. I mean, it's going to be interesting to see how the market reacts to these earnings. Of course, year over year, because we can continue to see earnings, decline. At some point, we're going to see, that reversal now at lower levels, but that adds to the psychology in the market. And I think that's a lot of market participants are keying off the psychology in the market as well.
Have a good trading day.
Thanks for having me, Angie. Thank you.